Hey everyone, it's about 5 o'clock on Friday, April 11th, and looking at my computer here, and looks like the stock market was actually up today. It's been a remarkable few weeks for investors anywhere in the world, uh, let alone Canada. So, a few things came across my desk this week, and I wanted to share them with you. And I thought the best way to do that is through a video to everyone. And if you have any questions, you can reach out to me after the fact. I'd love to chat with you. So I'm going to share my screen here now and go through a few charts with you. And so I'm looking at a chart here, and the best way to put things in perspective is to look at events in the past historically and see how they played out. So we're in this really uncertain time in the stock market. Well, the economy for that matter, but the stock market's been really affected and people's investments have been affected. So I wanted to show you how things have played out in the stock market, and we're looking specifically here at the US stock market. So the blue lines here represent the calendar rates of return for each year, 2025, all the way back to 1990. So it's a great sample to look at. And the diamonds underneath is really what we're going to focus on here. And what the diamonds represent is something called the drawdown in that particular year. And the drawdown is basically during the year, the stock market drops during the year, but it isn't representative of what the return is during the year. So as an example, I'll roll it into an example. So in 2020, yeah, most of you remember it was a tough time. The world was going through pandemic. And in March, when things shut down, the stock market went through, it crashed, right? So I don't know what the exact level was at that point, but it went from here to here. It dropped by 34% during the year. Now, had you sold your investments at that time, the market drops and there's a fear, uncertainty of what's going to happen going forward. You would have cashed out, lost 34%. But what happened after that big loss when the world sort of, got their act together and found out that or discovered that the world was not ending, the economies were still functioning, vaccines were on the horizon, so on and so forth. The markets actually rebounded. And in the calendar year of 2020, you had the 16% rate of return on the market. So had you sold at negative 34, you would have lost money, but you would have also missed out on the gains in that year. Fast forward to 2025, March, now April of 2025, we've gone through this massive drawdown in the last 4 weeks, down 19%, call it 20%. So we're down 20% in this short period of time. So it feels really, really rough right now. And it is. I'm not trying to make light of that, but we had a gain in the first part of the year. It's been wiped out. We're down 10% on the year, even though we've lost 20 in the last 5 weeks or so. But we're only in April. We don't know what the rest of the year is going to look like. But as you can see, every year there's a drawdown of some sort. It's not uncommon. It feels uncommon right now because this drawdowns happen very quickly. And when things happen very quickly, it hurts, right? So I'm going to shift gears now and look at another chart here. And this is a chart which incorporates fear. Okay, there's something called the volatility index, which is also referred to as a fear index. So when you have a lot of volatility and when things go up and down, that's volatility, and we're in that volatile time right now. So this index that is out there, we're out here right now. We're 10 out of 10 on the volatility index right now. So there's a lot of fear. And what this chart tells us is that when there's lots of fear, when we reach that maximum point of fear in the market, it's actually not a bad time to invest in the market, because the following 6 months after we reach this maximum point of volatility, the market actually returns 12% on average in the following 6 months. So as an example, if we reach in the past, if we have reached this maximum volatility fear index, the next 12 months on average is a good investment return period. The next chart I want to look at is the best and worst days. So we're looking at a chart here. It's the stock market return from 1990 up till now, and the dark blue line is what your experience would have been on that stock market, the U.S. stock market. There's a bunch of gray dots, dark gray and light gray. And if I were to ask you how many dots do you see on on this line, you'd probably say, I don't know, about 15 or 20. There's actually 50 dots on there, and the dark gray dots represent the 25 best investment days on the market, and the light gray dots represent the 25 worst investment days on the market. And the reason why you can't see them all is that they come in clusters. They come all at once, like not all literally all at once, but within the same week, within the same month. So when you put all those dots on a chart like this, you don't see them. They're all clustered in the same time frame. So when we have times like this where things are going up and down a lot, and we've had in the last 10 days, we've had some of the most volatile times that we've had in the stock market, and they're all clustered here. And the key to remember when you look at something like this is that if we were to react to a down market of -5 or 10% in one day, it's likely going to be followed by a positive 5 or 10% in the following days. And we've seen that in the last couple of weeks. So yeah, the key to remember when you're looking at or experiencing this firsthand is that you need to stick to your investment strategy, because these are times where there's actually opportunity for some of the portfolio managers that are managing some of your money. They're looking at some of these down days and buying more investments for you because they're realizing the opportunity that's there. So everyone's strategy is different. If you want to talk about how your strategy is held up in the markets in the last month or two, I'd be happy to chat with you. If you want to expand on some of this information, again, always here. Would love to chat. Just give me a call, drop me an email, book a time. I look forward to hearing from you. Thanks. Bye for now.